Hey there, everybody. Thomas Wood with Basecamp Trading. It is Friday, October 6th, and we're going to take a look at a setup from this morning that we sent out. I sent out in Slack. For those of you that don't know what Slack is, if you're a member here at Basecamp, we have a chat room that all of our members can be in. And when we're outside of the trading room hours, if there's a setup or a trade that we're taking, we'll post it in Slack so everybody knows that it's happening. Well, first thing this morning before the trading room opened, I sent out in Slack, hey, watch for the Microtrend breakdown in crude oil. And we were talking about a 500 tick or a 2-minute or a 5-minute price chart. Well, this is just a textbook setup here. If you think about how a market moves, right? It doesn't just run straight down or run straight up. A market will move and then go into compression and then run and then go into compression and then run and then go into compression and then run, right? So when we're trading, where do we want to be trading at? Well, we want to be trading when it's running. So when it's breaking out of those compression zones. So a micro trend is essentially just an easy way of saying that market has run either up or down and then gone into compression. And that compression is what we call a micro trend. And when it breaks out of that compression, that's when you establish your trade. So in this case, crude oil was heading lower. We went into compression here, and you draw your trend line connecting the two pivot lows. You broke out of that compression and we accelerated lower. I mean, textbook setup, textbook follow through. It worked out just like it's supposed to. And what you look for when you have this type of setup are a couple different things. A, we have the trend in our favor, which is good. Okay, the trend was moving down, we're breaking down, so we're trading the direction of the trend. B, it's a breakout trade, so when it breaks, it should accelerate very quickly, just like we did here, which allows us to use tighter stops and in turn have a better reward risk ratio. And C, we had momentum in our favor, because if you look at the pivot high here compared to the last pivot high there on the momentum, you can see our momentum weakened right before we went into the breakdown. So we had bearish momentum leading into a bearish breakdown in the direction of a trend. So you had several different things lining up for you, which made this such a good trade opportunity. You broke from about 50.20, and you can see right now current price is 50 or 49.37. So you're about $900, 800 and some change per contract worth of a move. So overall, very nice trade opportunity, and where you're getting about a 10-to-1 reward risk ratio. All right, so keep an eye out for this type of setup. You can see, again, be remembering how a market moves. It's run and then compression and then run and then compression. And we want to stay out of the market when it's compressing, and we want to jump in as soon as it breaks out of compression. So in this case, it was the breakdown here, and then you can see again compression right there, and breakdown, and then compression, and then breakdown again. So and now the market would be back in compression. So that's all I have for you for today. I will see you in the trading room bright and early tomorrow morning. Don't forget to like and subscribe if you're enjoying these videos. I'm going to be doing more on price action here over the next several weeks. So that's it for today. And until next time, happy trading, everyone.